Stocks closed mixed on Wall Street. The Dow and the S&P 500 correct, while the Nasdaq ekes out gains as inflation fears spook the market. Yields also spike as CPI for January comes in higher than expected at 0.5%. Asian markets trade largely higher, while the GIFT Nifty is also suggesting a slightly lower start for the Indian markets. Crude snaps 3 days of gains. Brent corrects over 2% to around $75 a barrel as U.S. inventories rise and as the Fed signaling slow rate cuts in 2025. Gold prices remain steady about $2,900 an ounce as trade war fears persist. Trade ties, defense collaborations and tariffs tops the agenda as Prime Minister Narendra Modi lands in the United States for talks with President Donald Trump. The White House indicates that Trump is also likely to sign an order to impose reciprocal tariffs on countries having import duties for American goods. It's a good news, bad news situation on the macro front. India's retail inflation delivers a pleasant surprise as it slips to a 5-month low of 4.31% in January, but industrial output slows to 3.2% in December, dragged down by the weakness in manufacturing and consumer non-durables. Big relief for Kotak Mahindra Bank. RBI lifts supervisory restrictions imposed on the bank after 10 months. The restriction is being lifted, allows it to onboard new customers through its mobile and online banking platforms. Also lifts the embargo on issuance of fresh credit cards. The RBI embargo was estimated to be costing the bank 450 crores annually. Hello, good morning. You've tuned into CNBC TV 18. You're watching Power Breakfast with me, Vinny Motiwala. What's happening in the Asian markets today? We're seeing a bit of a mixed opening that we could say coming in for the Asian markets, while most of them are trading on the positive side. We have Taiwan index that is actually trading slight bit on the negative territory, down 5 points as of now. Other than that, Seng is holding on to gains of 0.8%, ASX 200 holding on to gains of 0.4% approximately. Nikkei is also holding on to good gains of almost 1%. Shanghai, that's another one that is managing to just see some bit of a decline and trading on the red territory. But let's look at the Nifty implied open. A muted start is what we could say is coming in for the Indian markets. Right now, it's up 14 points. But, it's key to watch out for what's going to be happening in the markets. Today's Nifty expiry as well. And yesterday, we had seen a very volatile trading session. So that is going to be key factors that we're keeping an eye out on in terms of the Indian market as well and where the Nifty is headed. But what happened in the US market? Now, Wall Street ended mixed with the S&P 500 ending 0.2% lower, while the Dow Jones and the Nasdaq falling around 0.5% as well as 0.3% respectively. This came in after the CPI data that came in is more than expected in the month of January, raising concerns around inflation fears that could reignite in the United States. Now, other than that, we have the consumer price index that jumped to 0.5% for the month of January, putting the annual inflation rate somewhere at around 3% and also leading to a sharp rally that we saw in the 10-year US Treasury yields to 4.66%. Now, the US CPI data for January, X of food and energy also came in higher than expected at 0.4% versus the expectation of 0.3%. The increase in inflation last month was mainly due to the rise in costs of groceries, gas and used cars, a trend that will likely underscore the Federal Reserve's resolve to delay any further interest rate cuts. So that is important to watch out for in the US markets because not much of an exciting trade coming in there. But, that's the overnight global market action that we have for you all this morning. But how is all this going to be impacting our Indian markets? We have a team of research joining in with us today. We have Abhishek as well as Sudarshan here. But before I go to them, let me take you all through what's happening in the Indian markets. What's the trade setup that we're expecting today? Like I was saying, that we saw a very volatile trading session coming in for the Indian markets yesterday, though by the end of the day, we saw recovery and closed above the 23,000 mark, just slightly above that level. it was a sixth trading session that we saw that the Nifty actually closed in the red. So will be interesting to see today where the Nifty is going to be headed. Yesterday, metals, PSU banks, financial services, that showed some bit of a strength in the market. So today, is that going to be continuing for these sectors? Is something to watch out for. What's weighing on the market overall in the recent times is uncertain global cues, that trade war and tariff wars that have been going on. That is something that is a bit of a concern and a jitter that is causing in the global markets. Other than that, FIIs, they've continuously sold in the Indian market. So that is something that one should be watching out for going forward as well. And mixed earnings is a factor that is impacting the markets. Like I was saying, FIIs selling. So FIIs have also sold for the strict session. And we're seeing that FIIs yesterday sold around 4,969 crores. Now today, what are the factors that could impact the Indian markets? We had the US inflation data that came in, which was hotter than expected. Keep an eye out on that. On the other hand, India's January CPI inflation, that came in at a 5-month low. So let's watch out for that and how that will impact the market. Weekly expiry could see some volatility there, and updates coming in from PM Modi's US visit will be key factors to watch out for. Any highlights on that front in terms of trade? But yes, Nifty implied open, muted start is what we're expecting today. Moving on, let's go across to Abhishek, who is here to tell us which are the important stocks to watch out for in today's trading session. Good morning, Abhishek.
Good morning, Vinny. So the first stock on radar will be Kotak Mahindra Bank. Now, RBI has removed the supervisory restrictions from Kotak Mahindra Bank. So this was one of the last, restrictions that's being lifted by RBI. So RBI had placed restrictions on Kotak Mahindra Bank on 24th of April 2024. So with this removal, now Kotak Mahindra Bank can issue fresh credit cards, which augurs well for net interest margin for them as well. And they can also onboard new customers via online and mobile banking channels, so that may augur well for deposit momentum for them as well. Now, ICICI Bank, the JV partner Prudential PLC is evaluating potential listing opportunity of ICICI Prudential AMC. So, ICICI Bank will retain majority stake in ICICI Pru AMC. Muthoot Finance, robust result with respect to gold portfolio of theirs. The NII and net profit both are ahead of our polls. Bharat Forge, the revenue is down 7.5% YY. However, net profit is down much higher, like 8.5% on a YY basis. Godrej Industries, strong set of numbers coming in over there. Revenue up 34.5% YY and profits up 77% YY. ITT Cementation, revenue up 11.3% YY. However, net profit is up just 11% YY. PTC India, their revenue was almost flat, a decline of 0.2% YY. Profits are up 58.2% on a YY basis. And the worst results amongst lenders has come in so far from Fusion Finance. Gross NPA ratio has ended up to 12.6 versus 9.4. Their ROA is at minus 27.6% and ROE at minus 132.9%, which is a disaster result coming in from them. Back to you.
Okay, Abhishek, thank you so much for those important stocks to watch out for on trade. But let's go across to Sudarshan, who's waiting by to tell us what are we expecting today in the world of F&O. Good morning, Sudarshan.
Good morning, Vinny. So what a day it was. At one point, it looked like all grim. All the indices were down somewhere in the range of 1 to 3%. But second half, what a recovery we saw. Nifty mid-cap index saw a recovery of more than 1,500 points from day's low. And at the end, while Sensex, Nifty and Nifty mid-cap closed in the red, Nifty Bank, though, managed to close in the green. For today, GIFT Nifty is indicating start with minor gains, or say we start normally flat. Talking about the flows, yesterday FIs have sold nearly rupees 5,000 crore, while DIs have bought more than rupees 5,900 crore. In the index futures too, FIs have sold more than rupees 400 crore, but they have added long positions and added more than 3,700 contracts. Also, they have added short positions by adding more than 6,000 contracts. With this, FI's long exposure now stands at 15%, and on the client side, long exposure is at 71%. On the option front, two call options, 23,000 call has seen addition of more than 33 lakh shares, and 23,100 call has seen addition of more than 21 lakh shares. And on the put side, 22,850 put has seen addition of more than 17 lakh shares, while 23,200 put has shed nearly 10 lakh shares. So basically, it tells you that on the upside for now, for Nifty, it's capped at 23,200, and while on the downside, it can go up to 22,700. With this, support for Nifty is 22,700, resistance is at 23,300. Stocks in focus, keep an eye on realty stocks, because over the last few days, all the major names have seen a big fall.
Okay, absolutely. Real estate is going to be in focus as well, and on those names that Sudarshan is highlighting. On that note, we're going to sip into a very short break, viewers. Up next, we'll bring you Prime Minister Modi's updates coming in as he lands in Washington, D.C. for a two-day trip to the United States. We'll tell you what's on his agenda after this short break. Welcome back. Thanks for staying tuned into Power Breakfast on CNBC TV 18. Now, Prime Minister Narendra Modi has landed in Washington for a two-day visit to the United States. Parikshit is joining him with us from Washington, D.C. to tell us what is on the Prime Minister's agenda. Hi, Parikshit, and what are we expecting? Interesting meetings that will be happening there.
Well, this visit is less on show, less on ceremonies, more on substance. It's a tight working visit, which will be a little more than 24 hours. The Prime Minister has already met Tulsi Gabbard, who is a Republican leader, just been confirmed as the Director of National Intelligence. So that was an important conversation. You had the likes of Vinay Quatra, the Indian ambassador to the US, NSA Ajit Doval, Vikram Misri, the Foreign Secretary, External Affairs Minister Subrahmanyam Jaishankar, who were there in the room. Tomorrow is when the Prime Minister is likely to meet Elon Musk. He will be meeting Vivek Ramaswamy, and he'll also be meeting Mike Waltz, the US National Security Advisor. In the afternoon, there will be that all-important meeting with Donald Trump. Trade is going to figure very prominently in the discussions. In fact, the White House spokesperson in a press conference just today, when Prime Minister landed in D.C., has said that the US government would be imposing reciprocal tariffs in the next 24 hours, and they could come into effect before the Trump-Modi meeting. Now, whether India is a target of those tariffs as well remains to be seen. We very well could be, because Trump has called India an abuser of tariffs. Even the White House economic advisor has gone on to say that India has enormous tariffs. So India could very well be in that list of countries. We spoke to the Indian side about their expectations. They said that they are preparing their reaction to any kind of tariffs that are there on India, but they hope that it's not just on India, it's on others as well. But clearly the conversation on trade is going to be a tough one. The message from India is going to be this, that we are willing to make concessions, we are willing to help you in reducing the trade deficit, but this cannot be a one-way street. It has to be a win-win partnership. It cannot be a win for Donald Trump and America alone. But clearly this joint statement that we'll see after the visit could set the roadmap for a limited trade deal by the time Donald Trump visits India in 2025, later this year, for the Quad Summit.
Absolutely, Parikshit. Thank you so much for that update coming in from United States. But Parikshit also caught up with John Newfer, who is the president and CEO of the US Semiconductor Industry Association. And he says India should consider zero tariffs on semiconductor manufacturing if it wants to become a significant player in the global supply chain. Listen in.
We are very dependent on global supply chains. We are very dependent on our overseas customers, which represent about 75% of our revenues. So we got to get stuff overseas in a way that's as inexpensive as possible, with zero tariff treatment at borders if we can. But also, we're making a big push to increase our manufacturing. 100% tariffs would be problematic. I just think it would cause a lot of disruption. Trade is super important for us, both going in and out of a country, and reduction of tariffs in India would be very, very helpful to us. I think it's very important for India to think about this as an incremental process, one step at a time, small bites, small but many bites at the apple, to build confidence and show that India is doing all the right things. Key things are infrastructure, water, transportation, electricity. But again, another key thing is a trade policy that helps us do more manufacturing in India. we get zero tariff treatment all around the world from countries that are competing for our supply chain business. We don't get that in India. India is already very strong on talent when it comes to design. 20% of our industry's design workforce is actually in India. But the talent to design a chip is not the same talent to manufacture a chip. So as India is thinking through putting education programs in place, that is also an important factor.
Okay, on that note, we're going to step into a very short break. And up next, we have India's CPI for the month of January that comes in at a 5-month low. Details on that after the short break. Welcome back. You're watching Power Breakfast on CNBC TV 18. Now, India's retail inflation eased to a 5-month low in January, largely led by the decline in food prices. However, India's industrial output fell in the month of December. Lata Venkatesh is joining with us to tell us what these key macro numbers indicate and what is it looking like.
Absolutely welcome numbers at 4.3 compared to our poll of 4.53%. The January CPI, and more importantly, just look at the past 4 months. It's gone from 6.2 in October to 5.5 in November to 5.2 in December and now 4.3. So the trajectory of falling inflation is extremely pleasing for a governor who has just cut rates. The chances are that the Reserve Bank's forecast for Jan-Feb-March at 4.4 could even be undershot by a bit, by a smidge. Because vegetable prices and pulses prices have come down. That's the important part. The inflation fall is driven by food inflation, which has come at 6% compared to the CNBC poll, CNBC TV 18 poll of 6.7%, much lower than the 8.5% of December. In fact, in the past 18 months, inflation has remained between 8 and 11%, and therefore the 6% is an extremely pleasing number. Month on month, 2 important items contributing to food inflation have fallen. Pulses have fallen by 2% in Jan over December, and vegetables have fallen by 15% in Jan over December. Vegetable prices falling in winter months is on expected lines, but the extent of the fall is very important considering the situation in which the monetary policy is. The expectation, therefore, from the broad market is that the April rate cut is practically in the bag. The additional information I can give is we spoke to Ramesh Chand, the Niti Aayog agriculture member, agriculture expert, and he believes that food inflation is going to be low single digits all the way up until April. And thereafter, of course, we depend on the monsoon forecast. But if that is the case, then the expectation of the April rate cut is well founded. So on inflation, very good numbers. Core inflation at 3.7 is more or less on expected lines. On IIP, the 3.2% for December is a disappointment. Our poll was 3.9%, almost 4. So that is a disappointment. Their consumer non-durables at minus 7.6 is the big disappointment. But capital goods have grown at 10.3%, which is very positive. And that's probably explained by the fact that the government spent like no tomorrow in December. Their capex expenditure increased very sharply, and that has perhaps contributed to the very good capex number we have. Otherwise, industrial output overall is a bit of a disappointment, but the overall picture for state of the economy is positive. With inflation coming down, we should expect a boost to growth by way of a rate cut in April.
Okay, thank you so much for that, Lata. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18, leaving the Nifty implied open with a very muted start indicated for the Indian markets. But up next, your Pasan Morning Call, so don't go anywhere.